From the Golden Gate to Fisherman's Wharf, San Francisco is buzzing for AI. This stock must stay ahead of the trend. From cloud to custom AI tech, is Broadcom poised to outrun the competition into the future?
Boy, do we have a treat tonight. Broadcom, the $766 billion semiconductor and AI infrastructure company, has been a real wild trader over the last couple weeks. When Broadcom reported September 5th, even though the results I thought were terrific, their AI revenues came in a tiny bit light versus expectations. So the stock ridiculously plunged more than 10% the next day. Everyone pointed to this as still one more sign that the AI infrastructure story was dead. Then last week, we got some very bullish commentary from Oracle's Larry Ellison, NVIDIA's Jensen Huang. Turned out the whole group turned. Broadcom finished the week up 22%, and it's up nicely as people realize how strong the quarter really was. Can it keep running? Let's take a close look with Hock Tan, the legendary president and CEO of Broadcom. Mr. Tan, welcome back to Mad Money.
Thank you, Jim. Great to be here.
Well, Hock, the last time we saw you was before the VMware deal closed. That was a monumental deal, and it is really starting to work out. Maybe you can give us kind of a reintroduction to Broadcom.
Sure. Well, Broadcom has been around I've been running the ship for over 18 years. Started as a semiconductor company, and over the last 6 years, we kind of moved into infrastructure software. And that has gone very well. And the recent acquisition of VMware was essentially another step towards the direction of creating a very balanced mix between semiconductors, particularly focusing on enterprises, and infrastructure software, again, very much for enterprises.
Well, let's talk about the VMware acquisition. It turned out some people were concerned about about how it was performing. The execution, as always, because it's a Hock Tan company, was superb. But this was a breakout quarter. How come?
No, it was a jewel. The technology and the products and the engineering team which created the products, the core technology, been around over 20 years. It's great technology, and it's very, very critical for infrastructure, especially for large enterprises running applications on their data centers on-prem. That's what VMware is all about. And what we've done is improve the products, make it much more usable from just being compute virtualization to basically creating a virtualization of an entire data center on-prem in enterprises, and basically creating the same cloud experience privately on-prem.
Well, you're the only one, which is one of the reasons why I love the business so much. So let's talk about the ever-growing AI opportunity. At the beginning of the year, Hock, you were talking about AI revenue at $7.5 billion. Then you revised that to $10 billion in March. This time you raised it $11 billion in June, and now it looks like $12 billion. How can this be growing so quickly?
It is because we are in a segment of the market in AI where we are addressing several hyperscalers. And these hyperscalers has very strong incentive, ambition towards continually investing in large language models to basically create models that are smarter and smarter and eventually embed into their huge, large subscriber-based platform. And they have to keep investing, and they are really investing. They're not just proving it out. And one of the things that drives them towards a direct as they invest is they want to create their own what they call accelerators. They call it XPUs. We are right in the forefront of enabling these few hyperscalers invest and essentially start building up these large AI clusters of XPUs. And this is a roadmap over the next 3 to 5 years. This is not a one-year phenomenon as we see it. It's a journey for these guys, but it's a very urgent journey, and it's a huge opportunity.
I'm glad you talk about it being a longer term, because some of the analysts were caught up with the idea that maybe it's slowing, perhaps because they didn't realize that one customer may have asking for a little more customization, because this stuff is really dependent upon you. They can't just go. It's not a commodity what you're doing. But the idea that it could be slowing seemed to be completely fanciful.
Far from it, actually. As I said, this is a very focused, and it's a long-term, it's a midterm plan, 3 to 5 years I consider midterm, but it could be long. We see that roadmap over the next, for these hyperscalers, over the next 3 to 5 years. And their intention is to build out these large clusters, because what is needed to drive those large language models, those foundation models owned by these hyperscalers into improvements, to higher performance, into what they call higher IQ of their models. Seriously, over the next 5 years, is to keep coming out with a new generation. Each new generation of LLM requires multiple X, 2, 3X, maybe more of compute each year. So you can imagine that's a driver towards a larger and larger compute opportunity, which is going to be taken up largely by XPUs.
I'm so glad you put it that way. So many people are saying one and done. That's the false narrative. The narrative you just laid out is the one that's going to keep Broadcom going. Now, I had been concerned about the non-AI hardware, wireless revenue, some of what I guess you could call legacy. On this quarter, you said not only would there be green shoots, but you actually called a bottom. Now, you hadn't called a bottom before, so I know this is a serious thing that you did. You really believe that the so-called legacy is turning?
Absolutely. And the best, we reached bottom about a couple quarters ago, early part of fiscal 2024, and we have since seen sequential growth of our revenue from that bottom, which was about our Q2 fiscal 24. And what's supporting it is our bookings since that quarter had been growing 20% year on year. And what we see is a clear upturn and a clear upcycle of this semiconductor industry. Because as you know, Jim, this is an industry that's very cyclical, always very cyclical. Right. Now, that cyclicality had slowed down over the last 10 years because the growth rate of semiconductors has slowed down to mid-single digits. COVID-19, 21, 22 drove up demand for semiconductors because of the way we consume technology, the way we want to work remotely, change it happens. So there's a big upcycle, 21, 22. We're just suffering a typical hangover from the upcycle, and that downturn was late 23 and 24. But I think we have hit the bottom, and we're on a way to recovery. And 25, 26 will be an upcycle for non-AI semiconductors.
Okay, so I want to drill down on that. Wireless revenue increased just 1% this quarter. Storage connectivity sales fell 25. Broadband sales fell 49. Industrial sales fell 31. You are telling me that these are markets that next year could be doing much better.
Absolutely.
Really?
We believe that, yes. Because we're already seeing, especially server storage, tied to networking, non-AI related, and these are largely enterprise-based demand.
Right.
We're seeing sequential growth, strong sequential growth from the bottom of Q2 this year. Even though it's still what you express is year-on-year decline, but sequentially it's going up.
Well, that's what matters. I just want to go right back again just to the opportunity you have in AI. People have to realize that the opportunity is so great, but you really are focused on the big dogs, because that's where the money is. I mean, if it was all in the enterprise, Hock Tan would go all enterprise, correct?
Yes. This is a big dog. This is a market segment, XPUs for accelerators and the networking. These are the guys who are investing in today 100,000 GPU or XPU clusters. In 4 years' time, they're headed towards 1 million
and you're
XPU
in every
clusters.
You're part of the plumbing of every part of this, right?
We are engaged in with everyone.
Well, that's why your stock, I think, is way too cheap. And, I have to say, full disclosure, my club has a very big position in it. Why? Because
good for you.
Because you're Hock Tan. And we know what that means. It means that you are good for what you promise, always. Thank you.
Thank you for saying that.
Because it's true. That's Hock Tan, Broadcom's president and CEO, symbol AVGO. Thank you, Hock.
Thank you, Jim.
Partner.
Good to see you.
Midway's back there for the break.
Coming up, this sector's been making investors frown. Can this cosmetics player innovate a beautiful solution? Stick with Cramer. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.